Hey, this is Mike, and it's Friday, September 25th, and this is before market open report. So let's take a look at what the markets did yesterday. The markets finished up a little over 1/4%. And if you had watched my videos from the day before, I talked about how the SPY ETF needs to touch the 320 level before we could really start moving up. And we got that touch, like right after market open, the market dipped down to the 320 level, and from there it bounced right up and off, which was a great sign until we're moving towards the end of the day, and the market did begin to move down before finishing slightly higher. If you look at gold, gold also finished a little higher on the day. It was up. The GLD ETF was up almost 0.4%. So what does that mean for today? Well, there might be a slightly better than 50% chance that we're going to be down today for Friday. However, this is the end of September, which is usually the roughest part of the year for equities. So you may want to look at dip. This is the 1 month chart, and you can see it's not really pretty right now for the S&P 500. And then moving out for 6 months, it doesn't look as bad, but things are pretty rough right now. But I do think we're going to get through this and set ourselves up for a nice end of the year rally with tech stocks. Now, if you look at some of the most popular stocks, we had Tesla finishing up almost 2%, and after hours it was up another 1.5%. This is a pretty good sign. If you look at Tesla, it's actually in a little bit better shape than the S&P 500. I think what we're having here is just some consolidation, and this is looking like a classic. Let's just find a bid and then start moving upwards. So if you're looking to accumulate Tesla stock before the next run up, this is a good time. Look at Apple. Apple was up 1% and up almost another 1% in after hours. Again, the 1 month chart on Apple looks pretty ugly. We go out to 6 months. I think, Apple has a chance here to, if it could just stop moving down, if it could just have flat to up days, it could definitely set itself up for an end of the year Santa Claus rally. And then finally, let's take a look at Amazon over here. It was up almost 1% and then up 1% after hours. The 1 month chart on it is still pretty ugly, but you can see it's turning up a little bit over here. And on the 6 month, it looks like you can create some consolidation here before we move up to the end of the year. And if you don't have the money to buy these very expensive tech stocks, then you want to look at ARC Innovation, which has Tesla as its biggest holding, holds a lot of innovative tech companies. The 1 month chart is a little nicer looking than your Amazons, Apples, and Teslas. The 6 month chart looks a little better. So, the great thing about ARC Innovation ETF is that it's actively managed. So there's a lot of thinking going behind the CTF. So if you're looking for something that's a little lower priced, under $100, it's more actively managed and might be able to outperform what you may do. Definitely look at ARC Innovation ETF. One thing I really want to talk about is a kind of a disturbing trend I'm starting to see in the markets, and it could trap a lot of people and cause people to lose a lot of money. And it's this trend of now, and every company now is trying to say that they're getting into the EV business. And one of the big stories of the past week was SPI Energy, which had sent out a press release that they were going into the EV business, and then the stock spiked 3,100%, going from, was sitting at $1 a share, then boosted itself all the way up to $41 a share. It's at $13 at end of close yesterday. After hours, it went down to $11.15. I've seen this now. This is like the third time I've seen this trend. It first started when I first encountered this was in the late 90s, when the dot-com boom started happening, and all of a sudden all these old companies started saying, well, we're going into the dot-com business. And basically what that meant was they were just putting up a website. Like literally in 1997, if you had a company, a great example of this was K-Tel Records. K-Tel Records, they sold records through the mail. And then in 1997, they said, okay, we are selling records online. So essentially a dot-com company. Really just meant they just bought a website that said ktelrecords.com, so you could buy the record. But literally that stock tripled in one trading session. It was worth, I think it was like a $30 million company, and then it became a $100 million company in one day, and then it fell back down again because KTEL Records obviously did not survive. Companies like Amazon pretty much squeezed them out. This happened to a lot of other companies. Another time that I encountered this was during the crypto craze in 2017, 2018, where you had companies saying, "Well, we're going into crypto." Um, there were a bunch of examples where companies said we're going into crypto, and then the stock would double or triple and then dip back down again. And now we're going to see it with a lot of companies. A lot of, I would bet, penny stock companies are trading, $1, $2 share, going, we're going into EVs, and then the stock will spike up, and then people buy into it, and then they'll end up, buying at 30 and 40, and then watch the stock dip down to 11. So, my piece of advice is if you hear about a company going into saying, making this announcement that they're going into EVs, do a little bit of research and figure out what exactly, what product or service are they going to offer. If they don't have any real product or service, if they just have an announcement, that's a big sign that you should avoid that company because it's going to rocket up really high and then dip down. Now you may be thinking, well, let me try to play the short side of the stock. I see a stock like SPI Energy rise up to 40, I'll short it. The only problem is you don't know, it's very hard to know when to short that stock. And you could easily, if you try to short it, get squeezed out of that position. So my best advice is just don't play these stocks at all. The best thing to do is just find a company that you believe 10 years from now will be doing really well and just stick with it because you'll stick with it in good and bad times. And to give an example of that, this is one stock that I really believe in right now, and it was down 9% today. Now, this does not have me concerned in any way because the stock did rise pretty high. It went from 5, in the past, this is a 1-month chart, it has gone from 5 all the way up to 10.5, and it's down at 9. So when you look at the 1-month chart, it's pretty healthy. But I happened to jump in right after the announcement of Ryan Cohen coming in as an investor, and his vision is to take GameStop and convert it into an Amazon competitor. So what I did 2 days ago was I sold the 9.5 put, and that means that I have several contracts that are sold, and if the stock ends up at expiration, my expiration on it is October 2nd. If the GameStop is below 950, I will be put the stock, which means I will own GameStop's stock, which I don't mind owning. And my break even, because I sold the contracts for 57 cents, so the strike price is 950, so my break even is 893. So even if it falls below 893, I'll be happy to own GameStop and I can sell covered calls. I do believe, as I mentioned before, that this company 10 years from now could be worth a lot of money. I think this company, if Ryan Cohen, who's already built a $30 billion e-commerce company just selling pet food, Chewy.com is worth almost $30 billion. If he could create a diversified, if he could take what he learned from Chewy.com and put that towards an Amazon competitor, he has the potential to have $100 billion company in his hands, and this is, based on a company right now that's worth only, $600 million. So this is a company I definitely believe in for the long term. Some other companies that you may want, or other assets you may want to look at, silver is, it's had a bad dip in the past couple of days. It went from 25 to 21, but I do believe that commodities will outperform equities in the next decade. So if you're looking for a commodity to buy at a discount, I do believe silver is a great opportunity. Obviously, gold is a great opportunity to look at. It's at 175 now. That's pretty. It had a high of 193. It's down to 175. So this is a great opportunity to accumulate gold. And then also gold miners, you can use the GDX ETF, gold miner ETF. It was up almost 3%. All of these are worth looking at. If you look at the GDX, it has had a pretty violent spike in 2020, so it's kind of due to kind of move down and consolidate a little bit. But I do think this is going to be the GLD, the SLV, and GDX will be great to carry over the long term. So what do we look at for going into the next 40 days? We have 40 days until election. There's probably going to be a good amount of volatility and a little bit of confusion and fear and all that. And gold and silver benefit from fear and confusion in the market. So that's another thing to look at. And then after that, I think going into November and December, once we won't know who's president on election night, but we'll have a pretty good idea who might win. And from there, I think the markets will stabilize, and then you want to take advantage of the tech rally, which will definitely happen towards the end of the year. So that's all I have for today. If you enjoyed this video, be sure to subscribe and turn on notifications. I'll come out with these videos before market opens every weekday. And then on the weekends, I have a special report, my special report for Friday. I'm going to talk about the pandemic and why 2021 may be a very dangerous year for stocks in general, and just how to prepare yourself for that. Okay, so I hope you enjoyed this video. Thanks a lot. Bye.